Good evening. My name is Renee Powell. I'm with Oklahoma Family Network. We have Tammy Burleson from OFN on this call as well. And we are so excited to have RoseAnn Duplan join us. And she is the Policy and Communications Specialist for the Oklahoma Disability Law Center. She's quite an accomplished individual. And I am going to hand it over to RoseAnn.
Good evening. I'm here tonight to talk to you about Oklahoma ABLE accounts. This is a great program that's been around for several years now, and we'll just get right into it. Hold on just a second, it's not going forward. Let me try this. There we go. Before we get started, I have a little disclaimer I will not be giving you legal advice or financial advice tonight. I'm not an attorney or a financial advisor. There are investment options in the stable program. So if you decide you want to take advantage of those investment options, I would suggest that you go to the ABLE website, download the perspective and take a good look at those, and maybe consult a professional financial advisor if you have further questions. So throughout this, if you have questions, I would encourage you to just put them in the chat or raise your hand and I'll try to get them as we go through. There's a lot of information and I know it's sometimes easier to ask when you think of it than waiting till the end. So what is Oklahoma Stable? Oklahoma Stable is Oklahoma's ABLE program. It's administered by the Oklahoma State Treasurer, Todd Russ. And was launched in May of 2018, and it's offered to Oklahoma residents through a partnership with 12 other states. And what is ABLE? In 2014, the United States Congress passed the Achieving a Better Life Experience Act, or the ABLE Act, and it allows folks with disabilities to save money in a special account that's similar to a 529 college savings account. Similar only in that it is in the exact same area of law as those college savings accounts in the IRS code. But it allows people to save money without impacting their benefits. For years, Social Security, Medicaid, and other means-tested benefits limited folks to having no more than $2,000 in resources, is what they call them. Basically, all of your assets could not equal more than $2,000. Now, the house you live in doesn't count, your first car doesn't count, but if you had a second home or a second car, those things start counting. And when you look at the limit being $2,000, which it has been for several decades now, that's not a lot of money or assets that a person can have and still qualify. So this is a great way for people to be able to save money and not lose their benefits. So what is an ABLE account? Well, it's kind of like a 529 savings account, kind of like a checking account, kind of like a special needs trust, but it's none of those things. Completely clear, right? But we'll talk about exactly what it is and how it works. So what are the benefits of an Oklahoma Stable account? The individual with a disability is the owner of the account. So many times, because of those resource limits, they weren't allowed to have things in their own name. These accounts belong to the person with a disability. It helps foster financial independence. I don't know, oftentimes families don't call it a spend down, but if you've ever dealt with someone who lives in a group home or whose money is managed by a professional rep payee, they use the term spend down. They watch the money very closely that folks accumulate and make sure they never get to that $2,000 limit. Usually around about $1,500, they start looking at doing a spend down, spending that money down so that they never reach that $2,000 limit, so that they don't jeopardize their benefits. And oftentimes for those folks, especially that are living in group homes and so forth, they run out of things to spend that money on. And I've seen so many 18, 20-year-olds with fully paid death benefits or burial packages, which isn't a bad thing to have a burial package. But as you know, most 18-year-olds don't put their money into that. So this allows them to save money for things that are actually meaningful for them. And then there are also tax benefits to these accounts. You may qualify for tax benefits each year, depending on who's investing in the account. And we'll talk about that in a little more detail as we go through. Who's eligible for an ABLE account? You can go to the okstable.org website. There's a little quiz that you can go through. It'll tell you if you qualify. But I can tell you right now, it's very simple. You just have to be an individual who has a disability that occurred prior to age 26. Now, that doesn't mean that it had to have been diagnosed before age 26. We're seeing more and more adults get a diagnosis, say, for example, of autism later in life. And now we know that that autism was present well before they got the diagnosis. So as long as it's a disability that would have been present prior to age 26, regardless of when you were diagnosed, you would qualify. Plus one of these following. You either have to be eligible to receive SSI or SSDI due to a disability. Even if you're over income and don't receive it, as long as you're eligible due to a disability, that would count. Or have a condition that's listed on the Social Security list of compassionate allowances. This is a pretty long list, and it contains things that we don't normally think of as a disability per se. There's a lot of medical conditions. Certain types of cancer are on that list. So it's a pretty long list. And then the third way is just self-certification, that you're certifying that you are a person with a disability. When you go to set up the account, it's going to ask you if you have access to a letter from a healthcare provider saying that you're a person with a disability. You do not submit that letter. You don't even have to physically have it in your hand. You just have to be able to document if the account was ever audited that you are a person with a disability. So as long as you have medical records that show that and a doctor that would write the letter if you need it, then that's self-certification. Something that's really cool that's going to happen in January of 2026, they're going to raise the age limit for people who qualify to 46. So it would be a disability that occurred prior to age 46. And they did this to allow for those folks who have acquired disabilities, especially our veterans. They started looking at these programs and saying, we're really missing out on those veterans who acquired a disability in the service and now aren't eligible because it was after age 26. So that law changed, and it will go into effect January of 2026. And your disability will just have to have occurred before age 46, which I think is really going to open the door for a lot more people. Self-certification, I kind of talked about this already. It just means that you need a diagnosis of a physical or mental impairment that causes marked and severe functional limitations. And there's a whole list of the domains of it can be self-care, financial, learning. So if you have limitations in any of those domains, there's more, then that would qualify. The condition has to have lasted or expects to have lasted for at least 1 year. And you don't send in the written diagnosis, but you need to be able to present one if you were ever asked for it. The only people that can ever audit these accounts is the IRS. Okay. So how would you go about enrolling? You go to okstable.org. You can do it online. It's pretty simple. It says it takes about 20 minutes. I think that's directly proportionate to how computer savvy you are. If you're someone who's very used to doing online banking, it's probably going to take you a little less than the 20 minutes. If you're someone like me who's maybe not as computer savvy, it might take you 30 minutes. And the minimum deposit to open the account is $25. So who can enroll? It can be done by the person with a disability if they're able to do that on their own, or what they call an authorized legal representative. So that can be a person with a power of attorney, the legal guardian, the spouse, the parent, sibling, grandparent, or Social Security rep payee. And there's just a little form on the website that you fill out saying who's the authorized legal representative that's helping with this account. They also have what's called an entity authorized legal representative. And this simplifies the process for those overseeing more than one account. So this is for those folks, like I said, that your service providers, your institutional rep payee, where they're managing money for multiple people. I know Robin Arter out of Duncan, who runs Thinkability, loves this feature. She serves, I think she said 109 people. Most of them have ABLE accounts. That gives her one log on into the system. And then once she's in the system, she can see all of the various accounts that she manages. So that makes it very easy for those folks that are serving more than one person. It's also great for record keeping. It's very easy to print off a report for each person each month on how it's spent. That's true even for just an individual account. If you ever want to look back over, say you're trying to help your loved one with disability develop that independent spending ability, you can go over that with them each month to see how the money was spent and help them make better decisions. How do you fund your account once you set it up? It's pretty easy. You can do an electronic fund transfer right there on the screen when you're setting up the account. You can also, there's a form you can fill out and mail in a check if you'd rather do it that way. And there's also a way to set up payroll deductions, which we'll talk to you a little bit more about that. Okay. Would a parent with more than one child utilize the entity ALR as well? I think that you probably could. I would need to take a look at that form to be sure, but yeah, I think you could if you had more than one child. That way you could just have one login and see both accounts, or however many accounts there might be. Some of us have several children, so yeah, that would be a good thing to do. I'll take a look at that form, and then I can let Renee know exactly what it says, and she can send something out to you all and let you know. Okay. Payroll deductions for employees living with disabilities and their families. So you could do a payroll deduction into this account if you're the person with a disability and you're working, or even as a family member. If I chose, I could set up a payroll deduction from my payroll directly into my son's account. And it's pretty easy to do. The thing that we like to tell employers about this is many times people with disabilities that are working don't participate in the employee benefits like 401k programs, because those count as assets. So they don't want to put money in there and go over that asset limit. This would allow your employees to have a similar benefit that would not affect their Social Security benefits. It's at no cost to the employer. It gives them the same kind of opportunities as other folks that work there. And it brings financial parity into your workforce. One thing that we've talked to a couple of employers, some employers do a matching, like they do a match for their employees that are investing in the 401k. They could do the same for employees that have an ABLE account if they chose to. They could do an employer match into that account each month as well. This is a really cool feature of an ABLE account. Once you've signed up and you've completed all the steps to open your account, you'll have access to this gifting page, and it gives you a link that you can send out to family and friends. And I know usually Wanda Felty does this with me, and she does this part because she loves this feature. But as she points out, there's only so many gifts you can get over and over. A lot of times our kids with disabilities have very specific interests, and they're not interested in a lot of typical gifts. This is a link you can send out, and instead of maybe another fidget, they can make a contribution to the ABLE account as in lieu of a gift, or as Wanda points out, her family does a small gift for Kayla and then also contributes to this. So there's a lot of options. None of these gifts into this account count as income or resources. And we'll talk a little bit about some of the other features that allow you to use this without having to worry about ever going over your limits. So there are limits to how much you can put into an account each year. And it's based directly on that IRS gifting limit. So this will change every year. I don't have the 2025 numbers on here just yet, but we will update that when January comes around. The gift, anything that's in this account isn't going to count as an asset. The question was, so gifts do not count towards assets. They don't, because the gift goes directly into this account. You never take possession of it. Money in the account is not an asset. If you take the money out, we'll talk about what happens then, okay? So right now it's 18,000 from all sources. The system automatically rejects anything over that 18,000. So if maybe mom and dad are contributing, the person with a disability is contributing, you've sent the link out to aunts and uncles, grandparents, friends and family, they're contributing through gifts. You never have to worry that it's going to go over that 18,000. It's going to automatically stop taking contributions when you get to the limit. Now, if the individual with a disability is also working, they can actually contribute more in wages. So from their wages, they could contribute an additional up to $14,580, which would make the total limit for the year $32,580. When you set up the account, it's going to ask you if you're working or if the person's working or not working. When you make a contribution, it's going to ask you if it's from wages. So it's going to keep track of that. It'll keep a total on the wage contributions. It'll keep a total on all the other contributions. That way, again, the system automatically rejects anything over the limits. There is a lifetime limit, so the total in an account can never be more than $541,000. If you get to this limit, it won't take any more contributions, then it'll have to come down. If you spin down, then you can contribute more, but it can never be over that 541,000 at any one time. Someone asked if you're not working, when you start working, can you adjust this? Yes, you can make changes to the account at any time. Okay. Okay. So just to recap, for 2024, sorry, the limits are 18,000 from all sources, up to the 38,580 per year if you are working, gives you that extra for your wages. And then the lifetime limit is $541,000. Now, there are some considerations if you receive SSI. This is specific to SSI. Anything over $100,000 will count as a resource. Now, remember, your resource limit for SSI is $2,000. So once you hit $100,001, that $1 is going to count as a resource. So when you get to that $102,000 is when you're going to be at your limit for resources. What it will do if you go over that, it's just going to suspend your SSI benefits until you spend that down. It doesn't terminate them. You don't have to reapply. As soon as you spend down, you can get those benefits turned back on. The other thing, now someone was asking about does it count as an asset if it's in the account? It does not, but you do not want to take money out and hold it over from one calendar month to the next. So if you take out $2,100 to pay rent on the 30th of October, but you don't pay rent until the 1st of November, that money is going to count as a resource. So you want to spend the money in the month that you take it out of the account. That's the easiest thing to remember. Only spend it when you in the month you take it out. So that way you never have to worry about it putting you over resources. But once it's out of the account, it can count as a resource. Now, the account holder's own wages will always count as income in the month that they are earned, even if you contribute it into the stable account. So you could have direct deposit from your wages as the person with the disability into the stable account. It will still have to be reported as income to Social Security for that month, but it will not count as a resource going forward. Now, there are several options to choose from when you set up the account. and you can do one or a combination of these. There is the bank safe option, which is basically that low interest savings account option. It's 100% like a savings account. There's no risk to that. Then there are 4 mutual fund options, and each one is a little bit more risky than the next. Again, if you're interested in any of these mutual fund options where you're actually investing in stocks, I'm going to advise you to go to the okstable.org website, download the prospectus for that particular fund, and read that thoroughly. I know a lot of us are not investment kind of people. So if you don't have experience with this, I would highly suggest talking to someone who's a professional investment counselor. I know what Wanda did in the beginning. She chose just the bank safe option and just had everything in savings. And then as she got more used to it, she's had her brother, who's a little bit smarter about investments, look at these different options. And what she decided to do was all of Kayla's money that comes from Kayla herself goes into that bank safe option. And then as she started accumulating money from gifts, she started investing in some of these other options to let that money grow. So you have a lot of flexibility, and you can change it at any time. You can also set it where all gift contributions go into a certain fund. So there's a lot of flexibility. I encourage you to look at all the options on the account and decide what's best for your individual family and your individual goals. So a couple of years back, Oklahoma did pass an income tax deduction. Anyone who contributes into an ABLE account can have up to a $20,000 per year tax deduction for those contributions. Now, I looked at this in the beginning and I was like, 20,000, that's more than the limit. Wanda had to nudge me and go, well, that means you could contribute to more than one account. So this makes it really nice, especially with grandparents. I know grandparents a lot of times want to contribute to those college funds, but with this, this allows them to also contribute to this account that won't count against the person with a disability and still get that tax deduction. The other thing that we've been asked, excuse me, because we know folks often have family in other states. The way Oklahoma's tax deduction is written is in any ABLE account. We did verify this with the treasurer's office. So say you're an Oklahoma resident, but you're contributing to a niece, nephew, grandchild who has an account in Texas, you're still entitled to that tax deduction. Okay, there's a question, does a child having a CD set up when their mother died in an auto accident count? She can't touch this until she's 18 years old. If it is in the child's name, it will count as an asset for that child, yes. What you could do is when the child turns 18 and they have access to that account, as long as it's under the limit, you could roll it over into the stable account and then it would no longer count against them. Okay, so then once the money's in the account, what can you spend it on? This is really cool when you really read the language of how this was written. Withdrawals can be used on qualified disability expenses. So what is a qualified disability expense? So that's defined as an expense that is related to the disability. For our kids with disabilities, our loved ones with disabilities, almost everything's related to their disability. So it has to be related to the disability and help maintain or improve their health, independence, or quality of life. Now, so many times when we're looking at disability related expenses, they're just looking at those healthcare expenses. This is looking at anything that will help maintain or improve their health, their independence, or quality of life. When you throw quality of life in there, that really opens the door. And we've asked a lot of questions to the national folks about this, kind of testing the limits. And what they've said is, quality of life is very individualized to that individual. So what improves your quality of life is not going to be the same of what improves mine. A simple example that we use a lot is that when my friend Wanda gets up in the morning, she has to have that cup of coffee, or her quality of life is ruined for the day. When I get up in the morning, if you tried to make me drink coffee, I would have a terrible quality of life for that day. So you need to look at the individual and what improves their quality of life. Things that are listed, this is not an exhaustive list, but some of the examples they give are housing and rent, basic living expenses, transportation, education, assistive technology, financial management, health and wellness, and legal fees. When you look at quality of life for an individual with disabilities, there are so many things that can fall under that. Entertainment or travel, if it improves the quality of life for that individual, the answer is yes, but it's only the expenses for the individual. So you couldn't use it you could use it to pay for that person's travel, but not, say, the family's travel. It would just be for the individual with a disability. One of the things, if you think about behavior is often an issue that we have when for folks with disabilities. One of the examples we give, Wanda's daughter was having a lot of behavior issues, and they were trying to figure out what was happening that was causing them, and she couldn't regulate her body to get that behavior under control. But they found that when she was in the water, that helped regulate and helped reduce the behaviors. So they used her ABLE account to purchase a hot tub for her. And she was very nervous about doing it. So she called the national folks in Ohio and walked through this with them. And they said, if you can tell me how you believe this improves our quality of life. So she went through the issues they were having with behavior and how that sensory input from the water helps regulate her and reduces her behavior, which improves our quality of life. And they said, if you can articulate that, then that sounds to me like it's a qualifying expense. So you really, if you can articulate how it improves their quality of life, you're probably okay. As I said before, the only folks that can ever audit these expenses and whether or not they're qualified is the IRS. This has opened the door to allowing folks with disabilities to achieve goals that were never possible before. I mentioned Robin Arter earlier, who runs Thinkability in Duncan. She was one of the very first folks to jump on the bandwagon and really start helping her people that she serves use ABLE accounts and save money. She does some incredible things. She has a budget meeting each month with each individual she serves, talking about financial responsibility, talking about what are the goals, how much are you earning, what do you want to do long term. So Donnie and Michelle are a couple that she serves, and they wanted to buy a home. Donnie and Michelle are married and had never thought it was possible to buy a home. They were able with their ABLE account, sorry, to save up down payment for their house. As far as we know, Donnie and Michelle were the first people in the United States to do that. It's been several years now since they bought their house, and at the time that they bought their house, they were featured on MSNBC. It was a great story. But this really has opened the door to home ownership for people that didn't have that as a possibility before. We have another friend who wanted to purchase a car. His goal was to purchase a car, and then he lives in kind of a rural area, wanted to help other people with disabilities with transportation and then errands. And he was able to save up enough money to purchase a car and then started his own little business. So this really has opened the doors for people much beyond just saving money. So how can you spend money from your account? You can transfer it electronically into your personal checking or savings account. They have third-party check, like bill pay feature, just like most banks do now. You can go online and say, I need to pay this person or this company this amount of money, and they will mail a check to that vendor. There's also a stable Visa card. It's a little bit different than the regular debit card that you get from your bank. It has some really cool features that allow you to help teach financial independence and also keep your money safe. So it's basically a preloaded debit card. So you can go in and transfer however much money onto that card that they need for whatever the particular expenditure is, or if you want to do so much per week. A lot of flexibility. If you have an individual that's just learning how to manage money, you can be very specific and limit where that can be spent. Another issue we sometimes have is, folks with disabilities are relying heavily on HTS or other paid staff. And unfortunately, sometimes financial exploitation happens. This is a great way to limit the exposure there. You can limit where the card can be used. You can limit how much they can spend per day. All of those are controls that are available on the website. This is a great way to start easing people with disabilities into that financial independence and learning how to spend without jeopardizing the entire balance of the account. You also never have to worry if that card is lost, that they're going to lose the entire balance of the account. You're going to preload however much you think they need, the $50 a week, or they're going on a trip with grandma, so you put $300 for the trip. Whatever amount you want to put on there, you can put on there. Just remember, once it's out of the account on the card, you don't want it to be that amount that's going to put you over resources. There are some fees associated with these accounts. These fees have consistently gone down. As I told you in the beginning, we're in a coalition more or less with 12 other states. When ABLE first rolled out, Ohio was one of the very first states to put a program together. They now manage the money for 12 other states, including Oklahoma. When we first got into this coalition, our fees were close to $4 a month. They're now $2.25 a month. The more people that have grown, the more total dollars invested, the lower the fees go. So that $2.25 a month comes out $6.75 every quarter. If you invest in those money market accounts, there are fees that are asset-based, depending on how much you have invested, anywhere from the 0.19% to the 0.33%. And those, you're going to want to look at those perspectives to see exactly what the charges are for whichever account you choose. Oklahoma Stable and Special Needs Trust, they can work hand in hand together. Depending on how much money you have and what you're wanting to do, you can have both. They're complementary and can be used together. A trust can make distributions to an ABLE account. A trust can accept things that are not just cash, like property. Those are things you can't put into an ABLE account. Unique to the ABLE account is that the ABLE account has broader spending power. Those special needs trusts usually are very limited to what they can be spent on, and usually your basic living expenses like rent and food are things that can't be paid by the trust. We've been assured by the Ohio legal folks that if the trust makes a distribution to the ABLE account, the money then goes under the ABLE account rules. So those distributions can be done to the ABLE account where it can be spent on housing and food. You get the tax deduction for an ABLE account that you don't get for a special needs trust. There's no federal or state income tax earnings on the earnings of the account. And it can be administered and owned by the individual with a disability, which the special needs trust cannot be. So but they can work together depending on how much money you have. You may want to consider doing both. Okay. So what happens if the account holder passes away? The estate administrator notifies the Oklahoma Stable customer service, and they can then take over and manage the account if they're not already that authorized legal representative. If the account holder doesn't have a will, the account will go through the normal probate process. So there is a Medicaid clawback provision in the Oklahoma statute, which means that if a person has Medicaid and opens an ABLE account, Medicaid can take back any money that was spent through Medicaid on that person from the date they opened their account. So say your child is 20, they've been getting Medicaid for 10 years, they open an account at 20, something, God forbid, happens that they would pass away at 25, that those 5 years of Medicaid could come back out of the account, but only after all of these things happen first. Any outstanding bills are paid first for that person. Any Medicaid buy-in premiums can be taken out. And then any funeral expenses can be paid first. Then if there's money left, that is subject to the Medicaid clawback. I would highly advise you to think of it, this is not a way to pass money from one generation to the next. If you have an amount of money that you're worried about passing on, you're going to want to make sure you have a special needs trust for the bulk of that money, and then just use your ABLE account as the spending vehicle. That way you don't have to worry about this as much. And I would definitely talk to an attorney or financial advisor as to the conditions of that Medicaid trust as well. This is the contact information for myself and Wanda. We are the two ABLE ambassadors at this time for Oklahoma. We're hoping to add some more folks. So if you're interested in spreading the word, reach out to one of us and let us know. So I know that was a lot in a short amount of time.